So to me, first of all, when you trade, you need to figure out who you are, what type of person you are. A lot of people can just take things like on the surface and they're happy, they're satisfied. Some people are sometimes lucky or by instinct without doing a lot of due diligence. They pretty much can, anything they do is right. To me, I need certainty. I need to see something. It needs to be black and white, and I need to have a reason for something to happen. Okay. So at the same time, even though I need all this, I taught myself to have the open mind to accept that even though I have all the proof on my face, it's not going to be 100% right at all times, right? So that's why for me, when I trade, I need to see, like Ricky was just talking about, that move, that extension into an area where that thing is just going to find a wall and it will be very hard to get through it. All the buyers bought on the way is a breakout, whatever it is, you're getting, I stopped out, whatever it is. But once I see that moving to an area where it's going to find a very strong supportive resistance, I take that trade. And the difference is between me, for example, let's say Adriano trying to buy something out of a breakout or a breakdown versus against an area of into an area, which is what we do here, is I'm going to give you a perfect example, okay? And I'm being completely open and honest. I made a monkey trade this week. And it was a stupid trade, bored. I had a great day. I was like, you know what? It just comes into our mind. Oh, I'm invincible. So I bought 75,000 shares or something, and I lost 6 cents on it. And that was after hours, was a WWR stock. I don't know why I bought it. At the time, it looked like, oh, it's going to break out. It's not the type of trade that I take. 99% of the trades, I never do that. All the times, I never do that. One time, I let my guard down, and Goose is there. I was telling him all along what I was doing, told him when I hit my face in the asphalt, lost like $42,000. And I was like, all right, just going to have, to keep doing what I do, just as a good reminder to keep doing what I do right. Tupperware. My profit was twice that loss. But why? I have a strategy that I follow to the tech. And when I deviate from that, I pay the price. So it's just like a little reminder. So I have a bunch of sticky notes on my desk, and WWR just made
It's a new sticky note.
he gained his spot on the wall, so he's there. And my entry, size, and the loss in big red letters. So always remember, nothing's going to be 100%, but as long as you follow a strategy and let me take a look. When I try to talk myself, how good or bad what I do, what we do here is I just go back to the auto. And I don't talk about the auto to, brag, just because that's the best way to gauge how the strategy is doing for the day. So the auto so far today, it took 42 trades and lost in 11 trades. So it's pretty much 11, yeah, it's about 75% right? And the thing is, the auto doesn't pick and choose. It just takes every single trade. Of course, we as humans cannot take every single trade, right? But my point is, from the moment that you take a trade and it doesn't work out, don't act or don't feel like, oh, this is, BS doesn't work. I'm gonna trim down the size because I just lost money. You need to be mechanic on what you do. And Goose is right here on voice. Goose, when I lost that money on, it hurts to lose $1 or lose $100,000. It hurts the same when the reason is because you didn't follow your strategy. You didn't follow a rule that you normally follow. But Goose, was I upset? Was I cursing?
No, as a matter of fact, I missed the message when you told me the final loss on it. because you didn't make a big deal out of it.
Yeah, I
Back to
was actually
business as
laughing. I was
usual.
like, oh, monkey, monkey, monkey. But why? Because I know when I go back to my rules, I make it back. And
Yep.
the WWL was 2 days ago, was an after hours trade. And today yesterday, I made a good chunk back, but today I made more than twice the loss back. So it's
Hmm.
back. So go back always to what is working for you, to the rules that work for you. And another thing, you need to be extremely careful with, if you want to be trading on the long run, you cannot be emotional about this business. You just can't. It's You're gonna die. You're gonna have a heart attack. You're just gonna One day you're gonna fall off the chair. You're gonna be alone at home, and by the time someone gets home, you're already gonna be dead. It's without, no one was able to help you. I guarantee you, you cannot be a victim. You cannot subject yourself to the moods of the swings of the market. If you take a trade, it's like you say, this is a swing or this is a day trade. And, my pain threshold is this, and this, worst case scenario, this may happen. From the moment that you took that trade, you when that happens, if happens, is something that you already had warned yourself that was to be expected. At the same time, is when the market is going up and everything is working in favor. Oh, everything is a party, is a carnival, is beautiful, everybody's happy. It doesn't freaking work this way, guys. We're gonna have bad days. We're gonna have bad weeks in the market when everything looks like the end is near. But how the hell do you think we'll find opportunities to buy things when everything is running? When the market is at all-time highs and is breaking new highs? Are you freaking kidding me? See, when the market now is a different time, is kind of odd because of elections and corona thing. I think more than anything is elections. I honestly think the market's coming down this much because it thinks that Biden will win, and it's kind of giving something. Doesn't matter if he's going to be good or bad to the market. I think what's going on associated with some of the closures, uh, uh, in the business in general in some states. But I think mainly it's because the elections. So you can't, if you swing in something, you have a bunch of swings, and if you decide you want to be a swing trader, you buy something, the market loses another 1, 2, 3, 5%. I mean, what the? Just chill. At the same time, when everything's going beautiful, don't come singing and happy because it doesn't mean anything. The market is doing what it's supposed to do. It goes up and goes down and goes up and goes down. If you fall victim to, you'll be exhilarated and everything is great, or you're going to feel miserable when everything is down, half of the time you're going to be miserable. What kind of life is that?
Yeah.
Learn to accept it. That's trading. It's part of it. See as an opportunity. Don't see us, as what happens. The market takes a huge plunge. 3, 4, 5 days later, it recuperates all the losses and it goes, even higher. Everybody says what? Oh my God, I wish I bought on that dip,
Mm.
right? But instead, oh, I didn't buy in the dip. I'm gonna chase here. And what you're doing, you're buying from the people that bought the dip. Now they're selling to you. Start to think unlike everybody else is doing. Start to see, like I always say, look at the forest from up, not from every single tree. Don't just look. Life is not just what's 1 yard in front of you. There are 10,000s of miles there. So start to. You want to make money trading? You want to make fantastic amount of money trading? Start to see what others see as loss or failure as opportunity. I don't know why my tongue is not twisting today, but see as an opportunity. When the market's down, I mean IBM, what I don't even know my average now, but now is down. I had 2.5, 3 points from the entry. Didn't take it. Am I worried about that? Is 107 now? No, I'm not. I'm happy because I'm getting ready to buy more. So just use your freaking head, people. It's not, oh, I'm up 1 cent. Yeah, I'm up 50 cents. Yeah, I'm down 50 cents. Far. Oh no, life is over. I'm a loser. It doesn't work that way. If you buy, I don't know if you ever invest in real estate or anything. Do you buy house to invest when the market is all-time highs? Let me tell you something. This dummy here did. about a $3 million house that was $1.5 million 6 months prior and ended up selling for 1.2 million. That was thank God 10 years ago, but you don't want to do that. You buy when the prices are depressed. You buy stocks when the prices are depressed. You buy a car when someone bought and want to buy a new one, and you buy pretty much a brand new car, at a discount because somebody paid the premium price. Same thing for real estate, same thing goes for a boat, same thing for everything. You want to have money in your life, you want to keep money, make money and keep your money. That's how you need to be thinking. You buy when the prices are depressed, when they're coming down. Now, how much they're going to come down, I don't know. But as long as you buy something when it's already down at least 15, 20%, if you lose another 10%, okay, it's down 10%, you already got halfway into that move. So there's no reason to stress, to just sleep over it. Okay, we want you to be doing this for a long time. And to be able to do this, you have to think differently than the way you're thinking now. I have a friend that got into the Tupperware trade, and he sent me a message, I'm getting squeezed. I got, my entry. First was the morning report, and the next move into the quarterly area. And I was telling him, this thing is over 30% for the day. Relax. Oh, no, I can't stand the heat. I can't stand my heartbeat. I was like, you know what? Just fucking stop trading. Because one of all, you freaking me out with all this. He had like 500 shares. I don't know, all this freaking nervousness to start with. And his account is large. But why? Because he doesn't know what the F he's talking about, what the F he's doing. He's shorting his stock because it's going up too much. That's not a reason to short or too long because it's up or down too much. It needs to be up or down too much, a certain amount, moving to something. In 2, 3, 4 weeks, all the reds, all the swings, everything's going to get back up. And everybody's going to be, oh, this is awesome, this is great, like was with Mohawk, Schwab, everything.
Yeah.
And everybody forgets, the tough times. These tough times, that's when you make money, people. Not when you buy, when they move up, they sell up for a point. I'm talking about swings. This is when you make money. So stop letting the market dictate how you're going to feel. At the end of the day, you look at your portfolio. I'm down 5%. I'm down 10%. I'm down 10, 20, 30, 50, $100,000. Oh, life sucks. I'm going to have a drink. And then you lose a day. You lose that night of sleep. 2, 3 days later, everything's back up again. Oh, life is great. But you missed that great time, that you're not going to get back from 2, 3 days prior. All right. So just wake up and accept this is how the market works. We love you all, and it's trying to be as nice as possible talking about this, but come on.
Yeah, I touched on it yesterday, was that doing what feels counterintuitive is oftentimes the right thing in the market. If doing what your instincts told you to do was what made you money, and then the stock market wouldn't work. You have to do the hard things. You have to be ready to buy when everybody's panic selling. You have to be ready to.
That's how you make money. I mean, that's exactly how you make money. If you don't do that, why 90 or large, I don't know, Ricky, what's the percentage of people don't make money trading? Swinging, they trading what? Because, yeah, it's because they're all doing the same thing. You can't be doing the same thing as they are, which is buying the high or selling the low, and expect you to be any different as far as result than what they're having. Okay, and it's so simple. It's just when things start to go again, start to look bad, the very first thing you need to ask yourself is, if I'm feeling like this, everybody else must be feeling like that too, having that heat. So what everybody else will be doing, then you just do the opposite. How many times you took so much heat on a trade for whatever reason, because you didn't have a plan on it, whatever it is. You had the plan, you got to the plan, what's happening, but you still got the heat. You got out, you closed the position, and then like that, it turned around. How many times? It happened to me when I was beginner in trading. I lost the count how many times it happened. And I know it happened to every single one of you. That's what you need to go back, breathe, and think, well, wait a minute. If I'm feeling like this, Everybody else is. So what I have to do to be able to profit from this? What can I do differently than everybody else to come out ahead? And breathe is number one thing. Have a clear mind, then you'll see how easy it is to make that decision. Okay.
Yeah. Petey, that's because your instincts are from caveman times when they protected you and kept you alive. You know,
Yeah.
run away
Yeah.
from it's fight or flight, and that doesn't serve you well in the markets.
Nope. Yeah, this is different time. Somebody's gonna kill this time. Um,
No, I
um,
mean, I'm be the casino. Look at the pro room. I posted it.
Daddy Jimbo, yeah, back then in March, we were doing some crazy, crazy trades at the open. Remember when stocks would come in, halt, then drop and halt, and yeah, yeah. That March was my best. In March, in the month of March, I made more money than in the prior 2 years combined trading in 1 month. So, and that's when the market kept halting. Every open, every close, every would halt, the SPY would halt, then open again, then halt 2, 3 times, and a few times we thought was going to halt for the day. I don't know if you guys remember that, but
Crazy
yeah,
day.
those are like incredibly interesting times. Um, yeah, but just please always, always try to think differently than how you would think by instinct.
Yeah.
Right? Just try to go back, dig into it, and use the other side of your brain that is more analytical and think, wait a minute, I'm acting on impulse here. How should I really be behaving right now?